Happy Tuesday, everybody. If you had yesterday off, I hope you enjoyed the long weekend. If not, I'm sorry this is late, but I hope you had a good weekend anyway. Happy first day of summer in the Northern Hemisphere, summer solstice. Just to keep it real, happy winter solstice and the first day of winter for those in the Southern Hemisphere. Just to remember how lucky we are. Today is June 21st, 2022, and this is your Tuesday market update video. Let's recap last week, as much as we hate to relive it, and preview this coming week. As always, we'll try to find some silver linings in the week that has passed, and we usually can find something, so let's see what we can find. Monday started off with stocks gapping down, and all the major indices fell into bear market territory. Not the silver lining yet, so we're still looking. CPI report from the week before was still being digested, and the Treasury yield surged. UK GDP turned negative. Expectations grew for the Bank of England to hike rates stronger than originally expected. News from China did not help, as not only are we seeing hints of lockdowns again, there's also more being said about Taiwan. This fear that has been asleep for many for a while, and wake up. The Chinese made comments about the Taiwan Strait not being international waters. This is not a good turn geopolitically, as if we need more to deal with in that department. Back at home, the Fed meeting was in the crosshairs. The markets were starting to get positioned. We did get a small bounce, but not much in the follow-through. Not a lot in the news wires. Morgan Stanley CEO did mention recession probabilities at 50-50. This should be no surprise to anyone at this time. But regardless, the stocks went back to sell-off mode and closed at new lows. For those keeping score, the S&P 500 dropped just under 10% in 4 sessions. Markets were pricing in a 75 basis point hike on Wednesday. Most of Wall Street research lined up behind this, as the Wall Street Journal ran the headline, Fed likely to consider 75 basis point rise this week. This was worried about but not priced in yet, but now it's being priced in, pretty much expected. Dow down 2.79%, S&P down 3.88%, NASDAQ down 4.68% for the day. Obviously a pretty ugly day. Stocks opened pretty quietly on Tuesday, as the markets were now pricing in a 90% chance of 75 basis point hike by the Fed on Wednesday, of course. Largest rate hike since 1994. May PPI numbers were not any worse than feared, and I think, as I told you last week, this was built up so much already. Not much to see here, nothing new. In the good, bad, and ugly departments, good was FedEx raising their dividend by 50%, and Oracle having good earnings. Bad has to be the tech layoffs coming fast and furious, and the ugly was some big name warnings about pending recession. Ben Bernanke, Leon Cooperman, just about anyone with a mic, all of that, and the stocks rebounded. Even saw unchanged at some point, but then ended the day with a slight loss. Dow and S&P down slightly, NASDAQ with a slight gain. Nothing notable, but I guess these days green is green. So Wednesday was the latest in important days, as we know. As the Fed's meeting ended, the statement was released, and Chair Powell held a press conference. Before all of that, the momentum had the stocks off their lows from Tuesday, kept going at the open. Stocks gapped higher, and Treasury yields pulled back. China eco data was good, and that made the markets feel that the recent lockdowns did not hurt things there over there too much. U.S. data was not as good. Retail sales actually turned negative as a surprise, even with prices soaring. As the sales numbers, remember, are not adjusted for inflation, so the same amount of buying last year and this year means higher retail sales because we had higher prices. But we did go lower this month. This is one that even caught Jeremy Siegel from Wharton School, and it caught him off guard. He questioned it a little bit. The market settled into a range into the Fed release, and then popped when it was released. Then a swift sell-off until Powell started to speak again, and he was viewed as not as hawkish as feared. Rates fell, stocks rebounded. S&P had a 100-point move from the daily low, after as getting inflation under control seems to be the most elusive thing. Stocks faded from the highs and ended in the middle of the range for the day. Dow closed up 1%, S&P up 1.5%, the NASDAQ up 1.63%. Quick takeaways from the Fed: 50 to 75 basis points should be expected at the next meeting. Still committed to getting inflation at 2%. You recall we're above 8% now. So we all see that at the gas pumps and the grocery, war in Ukraine, China lockdown, supply chain issues are still a problem. Growth expectations keep falling, but are still positive by many. So the market took all that in stride, at least for the day. Thursday, we saw stocks open sharply lower. So what is it, good or bad? Is it too much to ask that in the absence of news overnight, one night, people don't wake up on the other side of the market so often? Strange, no? So recession concerns back in the news. Where were they yesterday? Who knows? Overnight, we saw a surprise rate hike by the Swiss National Bank, though I'm not sure any hike should be a surprise these days. Bank of England, too, as expected. As most of the day the market was bleeding down, we did get a slight pause into the European close, but not much else to move things up. A slight bounce into the close, and the markets closed just above session lows. So S&P down 3.25%, the Dow below 30,000 for the first time since early 2021. Stocks were all over the place on Friday, switching between positive and negative most of the day. Opened up a bit on better than expected news from the Eurozone, or more specifically these days, news that was not worse than feared. That is all we can hope for these days. So the Bank of Japan is still the only major central bank remaining accommodative, as Eco News as well as the Fed heads, U.S. Eco News as well as the Fed heads back in action, took U.S. stocks back to new lows in the morning. Quadruple witching options expiration at the end of the day brought things back up, and we closed out the week on a modest upswing. The Dow and the Dow was down slightly, S&P 500 up slightly, and the Nasdaq led the way, up almost 1.5%. Overall, another pretty ugly week. Dow down 4.73%, S&P down 5.75%, the Nasdaq down 4.76%. The middle of the pack, the Nasdaq was, believe it or not. If you want to know how widespread this is, every one of the S&P 500 sectors that are down more than 15% from their highs. Still, the best performing is energy, but at this point, up only 34% for the year. Now, 1 week ago, that number was 61% up for the year. Even energy had a rough week. So, curious stock action late in the day on Friday. The loved, beaten up tech shares participated. Amazon up 2.5%, Nvidia, Apple, Tesla, and Netflix all up over 1%. Even the cruise lines set sail, up 10% each with Carnival and Norwegian. Airbnb as well as the airline stocks took off too. In the Dow, Walmart, Chevron, Goldman Sachs, they dragged the index down, while American Express and Boeing helped to cut into those losses and brought those up a little bit. As we move into the weeks between the Fed meetings, we'll get a lot to chew on. Not only will all the Fed heads start talking again, this week alone, we'll see Powell in front of Congress again. We'll also see Bullard, Barkin, Mester, Evans, Harkin, and Daly. Not so much from the Eco News, but the University of Michigan survey on Friday has been watched closely more recently. Not only consumer sentiment, but also the 5 to 10 year inflation expectations. We'll also get some manufacturing and service PMIs to see if this economy has actually rolled over. We're seeing data about the slowing, but not rolling over yet. Earnings are coming soon, but a few stragglers. FedEx will be a telling one about the economy, Lennar on housing, even Darden on dining out. As you can see, we're extrapolating data from everywhere these days. Finally, as if we're not watching enough right now, crypto melted down over the weekend, did bounce back a little bit. There's little evidence that this will have material impact on the economy as a whole, but certain areas and geographies such as Miami. What will the mayor do, who's been taking a salary in Bitcoin? We'll just have to see. We'll keep watching for our keys to the market, possibly finding a bottom. Recall, peak Fed hawkishness, peak inflation, and declining geopolitical risk. Not much movement in these yet, but we are at levels of negative sentiment that we have not seen in a while, probably about 40 years. As we discussed many times, when everyone is on one side of the boat, it only takes a small shift and we can see a scramble for the long side. Overall, it seems that stocks are under-owned. A lot of cash on the sidelines. Will it stay there? If it starts to move back in, watch out. As we've seen the past 6 months, doorways get really crowded on the way out, but they also can get crowded on the way in. Markets are looking up this morning before the open. Global markets had a jump on the U.S. since we were closed yesterday. We'll just see if that holds. Watch for selling into this rally. We do have a lot to watch, so let's keep in touch. Stay nimble. Keep watching these videos. Send them to your friends who may have interest, and check out the Friday videos for the kind of planning actions we'll be taking in this down market. Have a great week.